So this week we finally got that rate cut by the Fed. We have Tim Anderson here on a Friday in studio. Tim, did Jerome Powell just do a great job, or is there something else going on?
Well, he did a much better job than last time, but compared to last time, the bar was very low. So markets initially sold off a little bit when he said we're not projecting another rate cut this year. We're not projecting a rate cut in 2020. Investors were a little cautious about that. But then later on in the press conference, someone brought up the concept of negative interest rates, which obviously we see all over Europe. He pretty strongly said that they would not do that unless it was an absolute last resort, so to speak. And the markets like to hear that. The markets also like that he had very positive things to say about the consumer part of the economy. And the market gradually regained the losses that it had had around the 2:30, 3 o'clock time frame and made its way back just to moderately higher on the day. Friday is a moderately positive day. We're coming down to just more than a week to go before the end of the quarter. And there's a lot of macro data next week.
Yeah, I know. Speaking of Jerome Powell, we were really trying to just pull his words out. But anyway, the market, we're ending up pretty well. So what kind of data points are you looking forward to next week?
Well, we're going to have a number of data points on the housing and home building market. That's been an area where up until this week, the data has been very inconsistent, but we got positive info on the builders and on the housing market this week. Probably lower mortgage rates below 4% are a catalyst for some better data points going forward in the housing market. And although those are not big market impact stocks, because they're just not really high market cap stocks, the whole housing and home building market can be as much as 20% of the economy because of all the contractors and subcontractors and peripheral business activity that's involved in a housing expansion.
All right, Tim, where's this market going?
You know, it feels like we're consolidating gains that we've had for the last 4 to 6 weeks just below all-time highs. We're less than 0.5% from all-time highs on the S&P 500 and on the Dow Jones. And I don't think it's a question of whether we make new highs. It's just when. Possibly before the end of the quarter. I mean, it would really only take one very strong day to do that. And then we'd have to see if there's any follow-through after the fact with enough volume and momentum from a few key sectors to sustain it. Well, look, the housing and home building part of the economy can be very significant as a catalyst for economic growth going into the fourth quarter and into next year. With mortgage rates finally below 4%, it's very likely that the data points out of that sector are going to start turning much more positive.